Hi everyone, this is Raghuram Jagru with 401 team at Royal LePage Ignite. Thank you so much for joining me for another market report. Before we start the market report, we're going to look at the labor survey number that was released by StatsCan to see how the labor market is doing. So in terms of unemployment rate, it's good news. We've been notching down from the month of July. In August, it went down again. We're at 10.2% nationally. So what does this mean in terms of additions of the jobs that came in to reduce this number? So there was about 246,000 jobs that were added, and out of that, 80% was full-time. So that's definitely good news. If you actually type in labor survey, job market, you will get a whole bunch of information on StatsCan, and you can decipher to your interest or even provincially. Now, when COVID hit, employment fell by 3 million. So that's a lot of jobs that were lost at that time. So far, we have recovered about 1.9 million. So we have about 1.1 million jobs to recover in the coming months. Hopefully, with everything, the restrictions that are easing now and people going back to work, that number can be achievable in the next coming months. If not even the whole thing, at least half of it would do definitely so much benefit to what's happening in the market right now. So another important stat is that men between the ages of 25 to 54 years, that means anybody who lost job within that age, about 96.6% of those employment of pre-pandemic have been recovered. So we're at 96.6% of that cohort working at that level before the pre-pandemic, right? So that is definitely a good news. And women, if you look at women between that age, which is 25 to 50 years, then we're at 95.6% of employment for those people at the level comparing to pre-pandemic. So that's definitely a very good news for both of the cohorts. And why this is really good news is because these are the cohorts that own homes majority of the time, and they have mortgages and car loans to pay. So the closer they get to the 100% job rate that they were at pre-COVID when all this happened, then it's definitely a good news. So it's also worth mentioning that both sexes 55 and older, so that's males and females who are 55 older, have also recovered, and they're at about 94.5% working level compared to pre-pandemic level. So that's very good. So we have men between 25 to 54 years who are at 96.6% of where they should have been pre-pandemic, and women between 25 and 54, 95.6%. And also, it's also worth mentioning that women was the largest increase in terms of going back to work for the month of August. We saw more women going back to work than men, so that's always a good news. That's a sign that definitely, you know, all these months they've been lacking in terms of going back to work. Now it's working the other opposite way, which is really good news for women. And the lowest still remains to be the youths, ages 15 to 24. We're only at 84.7% of what we used to be in February. So that's before the pandemic hit. We were at 100%. Now we're at 84.7%. But all in all, we're notching down. We still have a lot of work to do. So hopefully everybody returning to work with the ease of restrictions will make this numbers better in the coming months. So let's wait and see. Now let's go to the market report. Hi everyone. Thank you so much for joining me for the market report. We're going to do Durham Region first, and we're going to do Oshawa after. If you have any questions about any other municipalities, you will be able to give us a call, and we can definitely break the numbers for you for that as well. So in looking at Durham Region, how did we do for sales? In terms of sales, we went up about 45% year over year. So that's from 1046 to 1515 this year. That's 45%. However, it's worth to note that the sales actually notched down from a month over month. So from a month over month, we went down 4%. So that could be because a lot more people are going out or feeling the nerve that summer is ending, and instead of looking at real estate, let's go do something else, maybe cottages, beaches. So whatever happened there, the sales did go down 4% on a month over month. So it's worth to note that. In terms of new listings, we went up 19% year over year. So that means new listings that came into that month. So in this instance, we're talking about August, new listings that came into that month. It went up by 19% year over year. So we have a lot more supply. Also, the new listings that would be coming in went down 4% on a month over month. So sales went down 4%, and then we have new listings that also went down 4% on a month over month. Active listings means equates to listings remaining or available at the end of the month. That went down 42%. So that's insane. Compared to year over year, it went down 42%, and the active listing also went down 7% on a month over month. So we had less listings available for our prospective buyers in August than we did in July. So that could kind of explain why the sales are going down, because there's not a lot of listings available for people to look and choose and pick. Days on market, we went down 46% compared to last year. That means it took us about, on average, 26 days to sell a home in Durham Region. Now it takes us 14 days. That also went down about 14% from a month over month. So obviously, as you can see, the market is getting hotter. It's a very good indication, days on market, that homes are selling very fast. So when homes sell very fast in a market, is that the market is very, very, very hot. So that's what's happening over here. The composite benchmark price, we went up 16% year over year. So if you bought something in Durham Region last year, congratulations, because year over year you went up, you made about 16% on that asset. Not only on the down payment that you put, but also on the mortgage that you got. It could be 90%, 80%, money that somebody lent you. You leveraged that and you made 16%. Incredible. And on a month over month, we went up about 2%. So that's good news. We're going up 2%, and we also went up 16%. Again, we don't know for how long this will be sustainable, as these numbers, in the long run wouldn't make sense. So something's got to give. So definitely, there's going to be some changes in the coming months. We don't advocate for sellers or buyers. It is what it is. The numbers are this high because of low supply and high demand. But eventually, one of these fuels will run out. And when it runs out, the market will plateau. Well, that's what we're predicting, but let's see what happens, right? We don't have the crystal ball. So let's talk about Oshawa now. The sales, we have about, the year over year, it went up 45%. So we went up 45% in sales, probably the hottest August ever. And what's really unique is that in Oshawa, August, month over month, so from from July to August, we went up 3%. So we didn't go down in sales in Oshawa, we actually went up 3%. So that's pretty incredible here. New listings went up 17% year over year. So that's the new listings coming into the market. That went up 17%. And also on a month over month, that went down 4%. So new listings coming into the market went down 4%. Active listings on a month over month, it went down 10%. Year over year, it went down 50%, almost 48%. So active listings, again, the units that are available for prospective buyers or potential buyers, it went down 48% year over year, and it also went down 10% month over month. So that's not good at all for buyers, because the inventory was already short last month, and then it decreased by 10% from last month, and we're 10% less this month, or the August that happened. So which means it's going to put a pressure on the price, and that's exactly what happened. In terms of days on market, homes were selling in Oshawa in 23 days last year. That went down 52%. Now homes are selling in 11 days. That's lower than the Durham average, so that's crazy. there's no other word to call 11 days. If you can put your home on the market, prep it really well, show it really well, price it really well, and your home goes on 11 days, that's a pretty good seller's market. On a month over month, the days on market also went down 27%. So as you can see, the market is getting hotter and hotter. And obviously this is helping the sellers get premium prices for their properties. The composite benchmark price went up 17%. We were at 473,000. We went up 17%. We're at about 555,000 in Oshawa. That also went up 2.6% on a month over month. So imagine your home going up 2.6% on a month over month. In 30 days, your home went up 2.6%. Again, very, 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 very unlikely that these numbers will continue in this way. We're not here to carve out the future, but at a point, something's got to give, because these numbers will come to a point where rationality will not be there, right? So again, it's either the demand side or the supply side. Something's going to have to give, and the market is going to have to plateau soon, because at this level, we can't keep going up like this every month. But anywho, who am I to decide? Let the market dictate, and let's see what happens in the next couple of months. But very, very exciting. Employment numbers are improving as well. So let's see what happens in the next couple of months. If you have any questions regarding your home's value, regarding real estate, regarding mortgages, we also work on pre-constructions. If you're looking for investments, we predominantly do a lot in Durham region, as well as Vaughan and surrounding regions in Toronto as well, Scarborough. So if you have any questions, or if you're just looking for investment, please hit us up. So this is Raghu and Shan at 416-712-2006, and we can definitely help you. Thank you so much for watching this. Until next time, thank you.